Hey everyone, welcome back to Corporate Decoder, the place where we unpack the confusing world of corporate filings for you. Today we're diving into an S-1 filing from BioKey International Incorporated, which is basically a company saying, hey, we want to sell more of our stock, and here is why you might want to buy it. But we're going to look beyond the sales pitch and see what is really going on under the hood. Before we jump in, if you like getting straight to the point analysis of these important documents, make sure you hit that subscribe button. And if you want to connect with other finance enthusiasts and dissect these filings in real time, join our Discord community, linked in the description below. So, what is this document all about? It is a registration statement form S-1. This is what a company files with the US Securities and Exchange Commission, or SEC, when it wants to offer securities to the public. Think of it as the company introducing itself and its stock to potential investors in a very official way. This particular filing is dated the 21st of November 2025. It is a preliminary prospectus, meaning some details might still be up in the air, and it is for the resale of up to 6183336 shares of their common stock. These shares are not being sold by the company directly, but by a selling stockholder, in this case, Armistice Capital Master Fund Limited. The company itself won't get any money from this sale, which is important to remember. BioKey International Incorporated is in the business of identity and access management, or IAM in simpler terms. They provide solutions to make sure the right people have access to the right systems, often using things like fingerprints or other biometric data. They're essentially a security company for digital access. Now, every company that goes public or sells stock needs an auditor. For BioKey Bush & Associates CPA LLC is their independent registered public accounting firm. They're the ones who put their stamp of approval on the company's financial statements. See that little checkbox checked right there? It means they are registering these shares to be sold over time, not all at once. This is common when securities are tied to things like warrants, which we'll get to. This tells us a bit about the company's status. They are a non-accelerated filer, meaning they don't have to meet as many stringent reporting deadlines, and they're also a smaller reporting company. This usually means they're not as huge as the big players on Wall Street. Remember, this is a preliminary prospectus. It is like a draft. They're telling investors that the information here isn't final and could change. So, what are investors potentially buying here? Up to 6.1 million shares of BioKey's common stock. These shares are coming from a selling stockholder who got them by exercising warrants. This is a crucial point. The money from selling these shares will go directly to the selling stockholder, not the company. This type of offering, where existing shareholders sell their stock, is called a secondary offering. It doesn't bring new cash into the company's operations. Here is a little bit of current market information. Their stock BKY was trading at $1.03 as of mid-November 2025. That gives us a baseline for how the market values the company. Like most filings, there is a table of contents to guide you. We'll skip the boring bits and zoom in on what really matters. The summary is supposed to be a quick rundown. BioKey is providing identity and access management, or IAM solutions. With a focus on biometrics, they help companies make sure only the right people access their systems. They boast having over 17 authentication factors, including biometric core platforms. Let's get into the weeds a bit. BioKey's main product, PortalGuard, is an identity and access management platform. They say it goes beyond typical multi-factor authentication, or MFA, by handling things like users biometrically authenticating at any workstation without needing their phones, preventing account misuse, and even detecting duplicate users. They also have a large-scale biometric management platform used by a major bank to identify millions of customers daily using fingerprint biometrics. A key move for them was acquiring Swivel Secure in 2022. This expanded their reach, especially in Europe, Africa, and the Middle East. Swivel Secure now operates as BioKey EMA. Their business model is largely software as a service, or SaaS, where customers pay recurring subscription fees. Looking ahead, they plan to grow in government services, higher education, and highly regulated industries like financial services and healthcare. They believe increased security and privacy needs, especially with remote work and education, will drive demand for their solutions, including biometrics. They're also looking at strategic acquisitions in the IAM space to enter new markets, or boost their existing operations. This section gives us a snapshot of the actual offering. We have 6,183,336 shares being offered by the selling stockholder. Right now, BioKey has about 10.8 million shares outstanding. If all these shares are sold and the warrants are exercised, that brings the total to around 17 million shares. So before this offering, they had roughly 10.8 million shares out. That is the foundation. And after this offering, if all those shares are sold and the related warrants are exercised, we're looking at about 17 million shares. That is a pretty significant increase. Again, just to hammer this home, the company gets $0 from this stock sale. The money goes to Armistice Capital Master Fund Limited. However, if the selling stockholder exercises all the warrants, BioKey will receive about $6.3 million. They plan to use that money for working capital and general corporate needs, which might include paying off some debt. They are already listed on the Nasdaq, trading under BKE. This isn't a new IPO, it is about making existing shares available for sale. Now, this is where the real juice is for any investor, the risk factors. This is where the company has to tell you all the ways you could lose your money. One big risk highlighted is that if a lot of shares are dumped onto the market, it could drive the stock price down. This offering alone represents about 36% of their outstanding stock. If all these shares are sold and warrants exercised, that is a lot, and it can definitely put pressure on the price. They also caution that an active trading market for their shares might not continue. This means it could be hard for investors to sell their shares when they want to, or at a price they consider fair. This section is a legal disclaimer. Essentially, anything in the document that talks about the future, like their plans, expectations, or strategies, might not actually happen. They are saying these are not guarantees, and actual results could be very different. They list out a bunch of risks that could cause things to go wrong, from competition to market acceptance of their products, and even things like hostilities in Ukraine impacting their European customers. This section reiterates the details of the offering. It is up to 6.1 million shares being sold by Armistice Capital Master Fund. Limited these shares are available because of warrants they received. Here is a key piece of financial engineering. On the 27th of October, 2025, they agreed to reduce the exercise price of some existing warrants from $2.15 to $1.02 per S-share. This was done to facilitate the exercise and the subsequent resale of the shares. So the selling stockholder paid a bit more and got new warrants that let them buy double the number of shares they originally had warrants for. But at a lower price, these new warrants are for up to 6.1 million shares. It is a bit of a complex dance to get these shares registered and available for sale. The exercise price for these new warrants is noted as $1.02 per share. When the selling stockholder exercised those original warrants, BioKey received about $3.1 million. But they had to pay Maxim Group LLC, a placement agent, a 6% fee for their role in arranging this deal. That means nearly $200,000 went to the placement agent. This section just reinforces that the company isn't getting cash from the sale of the stock itself, but they will get cash if the warrants are exercised, which they plan to use for operations and debt repayment. This is where we formally meet Armistice Capital Master Fund Limited. It tells us how many shares they own before and after the offering. Armistice Capital Master Fund Limited is the player here. They own 540,747 shares before this offering and plan to offer 6,183,336 shares. It also mentions Stephen Boyd as the managing member of Armistice Capital LLC might be considered to own these shares too. This is common when investment funds are involved. This section details how the selling stockholder plans to sell these shares. They can sell them on the Nasdaq through brokers, in private transactions, or even through short sales. Essentially, they have flexible options to offload their shares. This is a legal designation. If the brokers or agents involved in selling these shares are considered underwriters, they could be subject to certain liabilities under securities laws. Even though the company isn't getting money from the stock sale, they are footing the bill for registering these shares. This means they're paying for the legal and administrative costs associated with this filing. Here we find out about the company's stock itself. They are authorized to issue 170 million shares of common stock. As of the 13th of November 2025, about 10.8 million shares were outstanding. They also have the authority to issue 5 million shares of preferred stock, though none are currently outstanding. Each share of common stock gets one vote. Importantly, they do not have cumulative voting. This means if there is a board election, a group holding slightly more than half the votes can elect all the directors, potentially limiting minority shareholder influence. They can pay dividends if their board approves it and if they have legally available funds. But there is no guarantee of this. This reiterates their Nasdaq listing. They have the ability to issue preferred stock, and the board can decide the terms, like voting rights, dividends, and redemption. This is often called blank check preferred stock because the board has a lot of flexibility in creating new series. Issuing preferred stock can sometimes be used as an anti-takeover defense or to raise capital in specific ways. This section talks about things like Delaware law and the company's own rules, which can affect how the company is run and how easy it is for someone to take control. For example, they have a supermajority vote requirement of 75% for removing directors or amending bylaws. This makes it harder for a simple majority of shareholders to make big changes. They also have strong indemnification clauses, meaning they will indemnify their directors and officers against liabilities, essentially protecting them from certain legal costs and damages arising from their duties. They also have director and officer insurance. The validity of these securities will be passed upon for the company by Fox Rothschild LLP. This is standard legal sign-off, and as we mentioned earlier, Bush & Associates CPA LLC are the experts who've audited their financial statements. This is where they tell you where to find more SEC filings. They point you to the SECU website and their own company website, though they make it clear their website content isn't part of this filing. This is a really important part of SEC filings. When a company says it is incorporating by reference other documents, it means that information from those past filings is considered part of this current document. So when you read this prospectus, you also need to consider their most recent annual report on Form 10-K and their quarterly reports on Form 10-Q. This includes their full year report for 2024. You need to look at that to get a complete financial picture up to that point. And their quarterly reports for 2025. These give you the most up-to-date financial performance before this filing. Part 2. This section is the Other Expenses tab. It lists the costs associated with this filing. They estimate around $14,800 in expenses for the SEC registration fee, legal fees, accounting fees, and miscellaneous costs. This is relatively small compared to the potential value of the shares being registered. This repeats the indemnification information we saw earlier, detailing how directors and officers are protected. They've also got insurance to cover potential liabilities. This covers all the stock and warrants issued in private deals over the last 3 years. We see a recurring theme here of warrant exercises and new warrant issuances, often involving Maxim Group LLC as the placement agent and Armistice Capital Master Fund, limited as an investor. It highlights that these transactions are often complex and designed to convert existing warrants into registered shares for resale. This reiterates the October 2025 warrant exercise agreement where the price was cut to $1.02. It also mentions that the resale of shares from the older warrants was registered in April 2025. This phrase appears multiple times and is key to understanding how these securities were initially issued. They were sold in private placements, meaning they weren't offered to the general public, and therefore didn't need SEC registration at the time. This is a common way for companies to raise capital from sophisticated investors. Exhibits and Financial Statement Schedules EP. This is where they list all the supporting documents. Exhibit 5.1 is the legal opinion from their lawyers, Fox Rothschild LLP, confirming the legality of the shares being offered. Now, let's talk strategy and the big picture. BioKey is in the identity and access management space. This is a growing market driven by increasing cybersecurity concerns. Their focus on biometrics, especially fingerprint technology, is a competitive advantage, particularly for large-scale deployments. The acquisition of Swivel Secure seems to have broadened their market reach into Europe and Africa. However, the financial health and strategy, as hinted at in the incorporated documents like their 10K and 10Q, are critical. This S-1 filing focuses on the resale of shares, not on raising new capital for operations. The fact that the selling stockholder is offloading a significant portion of their holdings, and that the company had to reduce warrant exercise prices to facilitate this, does raise questions about the company's immediate cash needs and the prior valuation of those warrants. While the company talks about growth in specific sectors like government and education, the real story for investors lies in their ability to actually generate revenue and profit from their technology. The complexity of their warrant transactions and the ongoing need to register resale of shares suggest that while they are actively managing their capital structure, the core business performance will ultimately dictate their long-term success. Investors need to pay close attention to the incorporated financial statements to understand the company's revenue trends, profitability, and cash flow. The risks highlighted about stock price volatility due to large sales and the sustainability of their trading market are very real concerns. The company's direction seems to be one of strategic partnerships and potential acquisitions, but the execution of these plans and their impact on actual financial results will be key observations. Alright, that is our breakdown of BioKey International's S-1 filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.